to another chart of the day video by the Trader Guy. This is essentially a series of videos where I find something out there that shows some form of technical analysis, and the video series is geared to give people their sea legs, so to speak, when it comes to reading charts. Things that you should see immediately and basically come from experience. It won't always be Forex, although the site, thetraderguy.com, tends to be geared toward Forex. But the point is it's about technical analysis. And you'll notice that on this chart, I really don't have any indicators. I have volume, and that's it. This is corn futures. And the thing that I want to bring up to your attention right now is this candle here. This is a shooting star, or a Pinocchio bar, if you happen to trade bars, which is a term coined by Martin Pring. I've heard it called a few other things, but essentially it's a reversal candle. And on the forums out there, especially in the Forex world, people go nuts when they see these things because they are relatively reliable reversal signals. But there are several problems with them if you don't use a little observation to go along. Now, when we look at the corn market, the first thing that you should notice, obviously, is the trend's up. But unfortunately, the amateur trader will look at this candle and they will state something like, well, it looks like the trend's up, so I'm going to start shorting. But there were some clues in this that could have kept you out of this trade. The first thing that I see is the fact that there is a lot of support just below it. It's also at a large round number at the 8 handle, and just below that there's a lot of support epitomized by this hammer down to 750. So when I see this kind of action, I see support, a hammer, another hammer here for that matter, I start to look at this and I think, okay, well, 8 obviously is going to be supportive. This is probably about 775, and then the bottom of hammers normally are supportive. That normally shows that there's been a bounce there, so there's buy orders underneath there. So this looks to me like there's a block between 8 and 750 that could be fairly supportive. And as you can see by the chart, that's exactly what has happened. Unfortunately, what people don't think about when they see these candles, which can be wonderful signals, is whether or not there's actually any opportunity for them to run before they run into trouble. Now, the first thing that people will say is, well, yeah, but it could have broke down, and that's true, and anything can happen at any time. But looking at this chart, what really caught my eye in this particular setup is now we have the same candle, which could very well form another signal. Because what happens when a shooting star forms, and people don't visualize this, they seem to think it's magic, and it's really not magic. It's not, there seems to be this mystery around these candles, and there's really nothing to it. You have to think what happened in this session. We entered price here during the day, and we tried to rally. And at one point in the day, in this particular case, 850, the sellers took over and pushed prices down. And that's what a line graph of this day would look like. Now you have to think what this means. It means that the buyers came in at the beginning of the day, and the sellers stepped in somewhere in the middle of the day, and these buyers and everybody along for the ride are now losing money at the end of the day. Which means that there is quite a bit of selling pressure, and these people are starting to freak out. They're losing money. And that's exactly why this candle is typically a sell signal. But take that same sell signal there and look at it a couple days later and see what we have. Well, we have price approaching the top of it, which would suggest a failure on the seller's part, right? This in itself is a signal. So what happens is, if price closes above the 850 level on a daily close, for example, now you have a pattern that looks something like this. And what this means is every single one of those sellers is losing money. So they will be in the same position the buyers were previously. Except there's a couple things that go with this. the trend's up. So not only are they in the same position, they look and they think, "Uh oh, I'm on the wrong side of the market." So they have to cover their positions. So advance a day or two or whatever, and they are buying, creating more pressure. Remember, you have to reverse your position from a sell to a buy in order to be flat. That will perpetuate this move. So on a daily close above 850, what happens is a lot of traders see these shooting stars and they fail and they go, oh, who cares about this market? I'm going to leave it alone. But truthfully, that is still a very important level. It's a very important signal on that candle. It's just not the signal you expect right away. With so to review in this trade, with all of the support just below, it wasn't necessarily the greatest trade to take. Plus, it was counter trend. In reality, traders like to take these counter trend trades thinking they're going to move the market, or they're going to follow the market back down to 5. But with the volatility of a trend change, very few traders have that kind of wherewithal. Even if that were to be the case, they most of the time get shaken out. You can see that there was always going to be support. Again, not a good reason to go short at this point in time. You certainly don't want to fight that kind of trend. And then now we're starting to blow out the top of it. And that suggests that all of the sellers are losing money again. Of course, they'll have to reverse their position. So this does look like a very healthy market. Again, we need to see the very last vestiges of resistance taken out and confirmed, busted up by a close on the daily candle, at least, my opinion. That's a little bit more conservative. Some would just buy right at 851. But nonetheless, it all means the same thing. It means that one side's getting blown out. And when you start to look at candles like this, the charts really look a lot differently. And these candles pop out, but for different reasons. It's not just, oh my God, look at the shape of this candle, we have to sell this contract. We look at this candle, we say, is it going to have a big fight on its hands? Yes. Is it with the trend? No. So it's not really the best trade. But we also look at the top of it as last vestiges of resistance, which means above 850, this contract becomes interesting again. Anyways, that's my quick lesson on candlestick shapes, or at least one of them. I will do as many of these videos as possible, try to put one up every day and show some type of chart that I think there's a lesson in. This will help speed the learning process. And if you happen to have found this via YouTube and have not been to the site, it is thetraderguy.com. The educational forum has hours of videos. They're all free. There is no gimmick. And hopefully you will learn something there. There's a lot of information, and I've put together quite a comprehensive section, educational section in the forum, which hopefully will help some of you. If you have any questions, feel free to email me at chris@thetraderguy.com. Thanks.